Hi everyone, welcome back to my channel. I'm your teacher, Miss Elliott, and in this video, we are going to prepare the trial balance from a list of accounting balances. In my previous video, we would have prepared the trial balance from the ledger, but in this video, we are going to be preparing it from a list of accounting balances. Now, when you are preparing the trial balance from a list of accounting balance, so on my left here, you see we have the balances for J. Elliott for a given period, say September 30. So on my right is my Excel document that we're going to use to prepare the trial balance. Now, once you remember the 5 accounts and the balances that these accounts carries, you cannot go wrong. So to prepare the trial balance, all you need to remember is the types of accounts and their balances. And once you remember that, then you will know whether you should debit the account or credit the account. So starting with assets. Asset carries a debit balance. Then we have our capital. Capital carries a credit balance. We know that assets, they are receivers, they are coming into the business, so we would debit the assets account. When the assets increase, you debit. When the asset decrease, you would credit. Capital, they are giver, so you would credit the capital account. So capital carries a credit balance. Next type of account is your expenses, and your expenses carry a debit balance. Then you have your revenue, and revenues carry a credit balance. And then you have your liabilities, and liabilities also carries a credit balance. Now I'm going to share an acronym with you that you can use to remember the types of accounts. So we can use CLEAR, CLEAR. So this acronym, you can use it, write it down in your notebook, and you can use it to remember the types of accounts. So you have capital, liabilities L, expenses E, assets A, revenue R. So once you remember CLEAR, then you should not forget your types of accounts, and then you always will remember the balance that the accounts carry. So you have assets carries a debit balance, expenses debit, liabilities credit, capital credit, and revenue credit. So now we are going to look at the balances for J. Elliott. So we have sales, purchases, carriage inwards, carriage outwards, general expenses, insurance, salaries, open inventory, purchases returns, sales returns, motor vehicle, land, accounts receivables, cash, bank accounts payables, capital, joins, and loan. So we want to go right ahead now. So our first account here is sales. So we put that in the detail column, sales, and then we are going to identify what type of account is sales. So we know that sales is an example of a revenue account, because revenue, they are income earners, they make money come into the business. So sales is an example of a revenue account. Revenue, look back right here, revenue carries a credit balance. So it means that in the trial balance, you are going to credit sales of 98,000. Then our next account is purchases. So when you purchase stock or purchase inventory or purchase motor vehicle, fixed asset, whatever you purchase, those are expenses. So purchase is an expense. So purchase is an example of an expense account, and right here we have it. Expenses carry a debit balance. So it means therefore that you will debit purchases. So you go to your trial balance and you put in the detail purchases, you go to the debit column and you debit purchases of 60,500. Carriage inwards. So carriage inwards refers to the expense bear by the business to carry goods into the business. So the expense that the business bear to carry whatever is bought into the business. So we know that that is an expense, and we would have established that expenses carry a debit balance. So we're going to put in that information. We have our carriage inwards, and it's an expense, so we will debit our trial balance with 900. Then of course we move to the next one, carriage outwards. So carriage outwards is the expense that the business bears to carry goods to their customers. It's an expense, and we already established that expenses carry a debit balance. So we can go right ahead, carriage outwards, and we are going to debit carriage outwards with 2,000. Then we move to general expenses. It's an expense, so therefore it carries a debit balance. So we put in that information, general expenses, and we are going to debit our trial balance with 1,000. Then we move to telephone expense. Of course, it's an expense, so right away we are going to debit the trial balance with 1,700. Next account, insurance expense to the business, so we debit 1,500. Then we have salaries expense to the business, so we debit 3,800. Then we move to our next account, which is opening inventory. So returns, they are giver account. They are an example of revenue because you return the goods to the supplier. Maybe you find some fault or wrong size. For example, it might be wrong color, wrong size, damaged goods, so you return it to the supplier, so the supplier would have refunded you. So it's an example of a revenue account. Therefore it carries a credit balance, so it means that you would go to the credit side of your trial balance and you will put in the amount. Then you have sales returns. So sales return is where the customer returns the goods to the business. Sales returns, therefore it carries a debit balance. So sales returns, alright, so we want to move now to motor vehicle. Motor vehicle is an asset, and we know that motor vehicle is a fixed asset. Once it's an asset, we know that assets carry a debit balance. So we'll go ahead and we will put in motor vehicle, and we will debit the account with 32,000. Then we move to land, asset again, asset, and we will debit with 59,000. Accounts receivables. Accounts receivables, they are current assets, and once it is an asset, we know that assets carry a debit balance. So we put in our accounts receivables and we debit the account with 5,000. Then we have cash, assets again, carries a debit balance, so we debit with 12,005. Bank, asset, so we are going to debit our trial balance with 3,690. Then we have accounts payables. So accounts payable, these are liabilities in the business, and once they are liabilities, they carry a credit balance. So we put in the detail accounts payables, and we go to the credit side of our trial balance and we credit with 4,700. Then we have capital. Capital carries a credit balance. So we go to the credit side of our trial balance and we credit the account with 90,480. Then we have drawings, 2,100, and then we go to loan. We know that loans are liability in a business. You have to pay them back. So it's a liability. So you will go to the credit side of your trial balance and you will credit the account with 360. So there you have it. We would have included all the items, all the accounts that is for J. Elliott in the trial balance. So now we are going to balance off the trial balance. Remember that the trial balance total should agree at the end of the period. So key thing to remember is that when you are preparing the trial balance from a list of accounting balance, just remember the 5 types of accounts and the balances that each account carries. Once you remember that, you will know which account to debit and which account to credit. Once you have debited and credited all the accounts, then you go ahead and balance off the account. So your debit side and your credit side must agree. So we are going to balance. So here we go. Here, auto sum, quick checkup. And we have 194,740 for the debit side. So we are going to go to the credit side now of the account. Our sales should have another 0. So quick check here, realize that we forget to put one of the 0. It should be 98,000 instead of 9,800. All right. So we know that simple errors like that can cause your trial balance not to agree. So you make sure you double check to ensure that you would have entered all the figures correctly. So let's total the credit side of the trial balance. So here we go, and the credit side is 194,740. So it means that all the item would have been entered on the correct side. Once both sides of the trial balance agree, then you can go ahead and double line to show that the account is now balanced. So once both sides of the trial balance agree, you can go right ahead and double line to show that the account is now balanced. All right, so let me just go ahead and double line to show that the trial balance is now balanced. Okay, guys, so key thing to remember when doing the trial balance from a list of account balances, you are to remember the types of accounts and the balances that they carry. So if the account is an asset account, we know that it carries a debit balance, so you debit in your trial balance. If it is a liability, it carries a credit balance, so you will credit the account in the trial balance. Once you have entered all the accounts on the correct side, you would have go straight ahead and you balance off the account at the end of the trial balance. Both total must agree. Once both totals are the same, you double line to show that the trial balance is now balanced. That's it for today, guys. See you in my next video.